Namaskar viewers. Today I am bringing to you a short video on Tata Motors being an investor myself. I request the viewers to kindly peruse the disclaimer very carefully before proceeding further. On 20th December 24, I bought shares of Tata Motors at 770 rupees. The SMA volume was at 53.3 million and delivery percent was 47% at that time. The P ratios at 50 suggested a reasonable value and the EPS was 48.22, indicating the company's profitability on per share basis. Here are the few financial numbers of Tata Motors. The sales growth was 60%, the profit growth was 16%, share stock price rose 21%, and ROE was 30%. Reserves were healthy, borrowings were under control, and net cash had come down substantially. That was a matter of concern. In financial year 25, the net profit went down substantially, and EPS also went down from the previous year, which could be seen as a matter of concern. The stagnation of share price of Tata Motors was a matter of concern. The company's low P ratio was a concern for the investors. Additionally, there was decline in EPS in financial year 25 over 24. Investors' perception whether the company will be able to withstand the pressure of innovation and compete in the international market. Overall combination of internal financial performance, external market conditions were some of the reasons which were concerned, but the key reason lay somewhere else. Just to share a small perspective, Jaguar Land Rover Automotive PLC is a public holding company under Tata Motors. Jaguar Land Rover Limited is its main UK subsidiary managing design, production and sales. 71% of Tata Motors' total revenue comes from JLR operation and 79 to 80% of the group's operating profit is generated by JLR. On June 16th, the British luxury maker has released a forecast of a growth of 5 to 7% over 10% mentioned earlier in the fiscal year 26, which was a big dampener of the market. 31% of sales of JLR comes from the North American market, and sales in the Chinese market have also come down, reason being competition for BYD. One of the key development in Tata Motors is a demerger plan. So Mr. Chandrasekhar mentioned that the company will be split into two. One company will focus on commercial vehicles, while the other will focus on passenger vehicles, including the JLR. The commercial vehicle section, he said, the revenue of 75,100 crores and record EBITDA of 8,800 crores. It has generated free cash flow of 7,500 crores and return on capital employed ROCE was 37.7. The PV section, the passenger vehicle section, Tata Punch has become the India best-selling SUV, while CNG and EV together account now for 36% of the company's multi-powertrain portfolio. The CV section has generated a revenue of 48,445 crores and a EBITDA of 0.9, which marks an improvement of 40 basis points over the EBITDA margin compared to financial year 24. So my key takeaways from this is a big thumbs up for Tata Motors, which is stalwart in the automotive industry. I'll start accumulating the shares for long-term investing at every dip because of the demerger plan, and obviously the company has mentioned about some innovative practices that will be introduced in the overseas market. And the financial result of Q1 to Q3 in the financial year 26 is something which I'll closely watch and await for the technical breakout before considering bulk buying. Staying informed about the demerger plan, as I mentioned, is the key to my investment strategy. Well, thank you. If you have liked this video, kindly click on the thumbs up button and subscribe to my channel and click the bell icon for more to hear from me.